Yeah.
Well, good afternoon, everyone. My name is Todd Christensen. I work as the SVP of Advancement and Member Experience with Capit Credit Union. Thank you for everybody who has joined us here this afternoon. I wanted to just talk through some of the items that are here that are on screen. We are welcomed and excited to have, we welcome and are excited to have Kent Owings and Nick Daniels from Tree City Advisors. They're both financial advisors, and they're going to be speaking with us today about taking the fear out of investing. But before I go through and do a formal introduction of them and turn the time over to them, just want to remind you that Nick and Kent will be with us again on Thursday. And you see on screen some information as it relates to the topic that will be covered on Thursday. And then next week, we have CapEd's Chief Information Officer, Toby Keene. He'll be making a presentation on Tuesday and Thursday on cybersecurity. What is it? And then how to protect yourself online. It's a great presentation. He's made that in several places with great reviews. And we would welcome you to, if you haven't already, register for that, to please do so. And then we finish out our 13 episode or series, 13 session episode or series rather, with our VP of Treasury Management, Albert King, on November 10th. He will be talking about the integrated approach to business banking and cash management that is really centered on business banking for small and large businesses. So we'd invite you to share that information and tune in. And then Nick and Kent to join us again on November 11th to talk about debt, loans, and taxes. And oh my, another
Yeah.
with them. And then we round out our series again with another business topic on businesses need money. And our VP of Commercial Lending, Casey Taylor, will talk about how businesses can secure funding through financial institutions. All of these are available to register and be able to join us at capedcu.com lunch money. Again, capedcu.com/lunch money. And we are very appreciative for those who have joined us. And we also want to share with folks that these are all being recorded and posted on that same website, that /lunch money, where you can come back and visit the information. So let me go ahead and stop sharing here. And that'll bring both Nick and Kent on screen here. Good afternoon, Nick. Good afternoon, Kent.
Hello. Hey, everybody.
As I mentioned earlier, but let me again do an introduction. We have Nick Daniels. He is on the left of the screen without the jacket. And then we have Kent Owings, who is on the right with the jacket and has the Clark Kent glasses. That's how I always remember Kent as Kent. And we're glad that they have joined us here today from Tree City Advisors to take the fear out of investing. A great week. We have Halloween coming up on this Saturday, and we're taking the fear out of investing. So Nick and Kent, let me turn it over to you and welcome everyone. And Nick and Kent, take it away.
Thanks, Todd. Thanks, Todd. I do want you to stop back by with that CapEd truck.
We will definitely do so. Definitely do so.
Yes. So thanks for watching today and spending your lunch hour with us. I love the whole concept of this lunch money. It's been great, very educational. And that cybersecurity, I'm looking forward to that. That is such a big deal today, and it can be so confusing. So really looking forward to that lunch money. And please be interactive with us. So if you have questions, this is your chance. I mean, typically we charge a financial planning fee to have that kind of relationship, as a lot of advisors do in the community here. So use this as an opportunity to ask us some questions. But we have a list of questions to start out with, if you don't have any. But number one is, why does the stock market exist? And started researching even just the history of the stock market, and it's fascinating. I mean, even when you think of the exchange traded floors before all of the technology, it seems like that's the caveman years of standing on a floor, giving hand signals and buying and selling, shares and equities on an exchange floor, which is still done today to an extent. But if you go back to when trading of goods first started happening overseas, this company called the Dutch East India Company started taking risk off of these ships. So a ship would have a risk of pirates, of weather, of sick and illness, of not getting the goods either to the other country or back from the other country. And so this company, the Dutch East India Company, started diversifying that risk. So they started buying equity, started buying into that company and owning part of the goods that were being traded, but then they would do it with many different ships. So even if one or two ships sank and didn't make it, this company still made money. And so as that momentum started to take off, more people then bought shares. So this Dutch East India Company was the first company then to buy shares of this. So they would own a piece of this company, which this company owned pieces of the ships. And it's almost like the first mutual fund or ETF in that point.
Yeah.
But that's kind of the start. But a lot of the why is how companies grow. And it's if you need access to capital, you can either go into debt, so you can get a loan, and you'll see that with bonds, or you can offer some of your equity, some of a partial share of your company, and in exchange for money. So now people have skin in the game, right? You own part of the company, but you're giving me money, and then you get to participate in the growth or the decrease of that company.
And I just want to jump in right there real quick. When you hear the term equity, just think ownership. If I have an equity, I have a little bit of ownership in that company. So maybe I own a little bit of the fleet of the Dutch East India Company trading ships, right? Or today, if you own an equity, a stock, like say Tesla, people hear about Tesla all the time, that's an equity. It means you own a very small bit of the company Tesla. So you want the company to do good so that your equity increases.
Which I get the comment all the time. I don't know about you, Nick, of I'm scared of the stock market because it's not tangible. I like to put my money into, tangible assets. And if you really look at it, it is tangible. And so if you shop at Walmart, if you buy a stock, a share of Walmart, you are a part owner of Walmart. So and then if you shop there, you're going into tangible assets, tangible store, a tangible business that you're owning a piece of. If you own Apple and you have an Apple phone, Apple computer, you name it. If you ever search Google on Google, that's Alphabet company. Although I might stay away from that one right now as they're going through the litigations.
Yeah, they might be in a little bit of hot water.
So, but those are the tangible aspects of it. And then like the Dutch East India Company did is diversify. And so we'll get into that in a little bit later of the difference between trading and investing. But that is, if you only buy one company, any one individual company, you're one lawsuit away from losing all of your money. So I'll just kind of let that sink in. PG&E, so that is the utility company that provides energy to California. That was a staple in the investing world for a really long time. They had great dividends. It was well established. It was just smooth sailing for a really long time. And then the fires happened in California. Big windstorm came up, moved some power lines around, started a fire. Many houses burned down. It was a travesty.
The big fires last year in 2019.
Yep. Big fires last year. And so now PG&E, went under scrutiny, risk of bankruptcy. There's all sorts of uncertainty, which uncertainty causes volatility. And that a lot of people's pensions and investments got hurt by that one company. So if you're overweighted, if you are too confident in just one company, you can get burned. No pun intended on that one. Anything to add to that, Nick, of why does the stock market exist?
Well, just the one thing that I would add to that is why the stock market exists. It exists to help you build assets, to build wealth. We were talking about this yesterday. Many people understand the idea of an investment property. Let's use a home, a rental property. You own a second home, you rent it out, you charge a little bit more in rent than what your mortgage is, and that way you can cover your expenses and you make a little bit of profit. That's an asset that people can understand because you can drive by and see it. But think about the barrier to entry in order to purchase a rental property. Just here in the Treasure Valley, average home price is now $400,000. And let's say you want to put 20% down to avoid PMI, get better rates, all of that kind of stuff. Well, that means you have to save up $80,000 for a down payment on an asset before it starts making you money.
On an average home.
On an average home.
Mm-hmm.
That's a high barrier to entry for the average person to be able to begin investing in that asset. However, if you look at the stock market, you can set up a Roth IRA, a non-qualified account, and you can invest in so many different options at $50 a month.
Yep.
So the barrier to entry is very, very low. It's another reason why we need the stock market as a tool in our tool chest to be generating and building long-term wealth.
And that's the goal. I mean, that's why if you're watching the news this year, very recently, Tesla and Apple both did a 5-to-1 split. So owning a share in either one of those companies got so expensive that they wanted to lower that barrier of entry to get more people to invest in this company. So they split that share. So if you had a company and its total value and you only had 100 shares out there, and each share would be worth $20 each, and you did a 5-to-1 split, that means instead of having 100 shares, you have 500. But the value of the company stays the same. It's just the amount of shares increased. So now you can buy, instead of being $20, it'd be $4 to buy a share into that company. So that's why they do those splits. They want to lower that barrier of entry going in so that you can start investing. That leads us really into the next question. Nick, how do I start investing?
How do you start investing? Well, the easiest way to start investing would be to decide what type of investing you want to do. Because investing means different things to many different people, and we get those questions all the time. In a nutshell, investing is something that you do for a long time period, 10 plus years. So you have to understand that. If you want to be a wise investor, you got to understand that the time frame that you're going to be setting this money aside is going to be 10 plus years. So let's just take a general retirement investing. If I want to begin investing for retirement, I have two options available to me, and they're available to anyone else out there. And that would be an IRA, which stands for individual retirement account, or a Roth IRA, which is an individual retirement account. There's some little bit of differences between those two. We don't need to talk about them right now, but basically is you can go online to TD Ameritrade, you can go to E-Trade, you can go to Charles Schwab. There's many different broker dealers out there that offer the ability for you to go online, open up a retirement investment account. They will lead you to the selections that you could choose. So you could choose one individual stock, which Kent already recommended you shouldn't do. It's far too risky. You're one lawsuit away from losing everything. You can choose mutual funds or ETFs, and those are easy ways to get diversity. It's an easy way for your $50 a month to own a little bit of many, many different companies. That way you can, just going back to the Dutch East India Company, if one or two companies that you own fail, it's okay as long as the other 98 companies are doing really well. And so that's really the easiest way, is open up an account and start making it automatic for yourself so that you don't have to think about it. $50 a month, most people can do that. And you set it for an ACH draft. When you get paid, boom, $50 goes into this investment account. And the whole idea is that over that 10-year time span or longer, you're going to see growth. The companies that you now own little portions of are going to do better year over year over year. And at the end of that 10 years, you would have the principal amount, so the amount that you've invested, but then you would also hopefully be seeing growth. So let's say over the course of 10 years, you put in $6,000. Your hope is that account overall is worth $10,000. That'd be phenomenal. You'd be really happy.
And what's not available to everybody, but is available to most people, is your 401k. And a lot of 401ks have a company match of at least 3%. So that's the place I would start. Absolutely. Number one, do you have a 401k? If you have a 401k, take the company match. It is 100% return on your money.
That's right.
Immediately. You're not going to get that anywhere else. Do the 100% return. Even if you're paying off debt, even if you have a credit card that's 26%, 100% return is greater than 26%. So, and take that company match in your 401k. And I would encourage a lot of people to look at the difference between if you have a Roth option of that 401k. We're going to get into that in another Lunch Money series. So I'm not going to get into the difference between a Roth IRA and traditional IRA here and why, but start with that 401k. Next step, go to your own Roth IRA or traditional IRA. Next step, there's a non-qualified accounts. When you max those out, you can do that. And so there's a lot of different ways to invest, and be careful of trading versus investing, which goes into our next question. What's the difference of trading versus investing, and why should I do one or the other? Do you want to talk about that?
Sure, I'll talk about it.
You want me to talk about it?
I'll talk about it. So you've probably heard the term day trading. Maybe you've heard the term swing trading.
Hey, I like this. Hold on. If you have a credit card debt at 25%, yikes, check with CapEd as we have options to save you. Great point. And that's we do send people to CapEd when we do see, 25% on some of those debts or refinancing right now. CapEd can help you out. Watch the Lunch Money with Casey Taylor. He's the head of the lending department there. He'll really be able to help you out with the debt management and lending on those things.
Yeah, good point. Good point. So let's talk about trading for a minute. Whether it's day trading, which means you're buying some companies in the stock market and selling them the same day, or swing trading, meaning you're buying them, maybe holding on to it for a few days or a few weeks and then selling it. The whole point of trading is you're not planning on owning this asset for very long at all. You're trying to capitalize on minuscule differences in the price, minuscule differences in maybe their price to earnings ratios. And it should be determined, these set points. I will get in at this parameter and I'm going to get out at this parameter. And you should stick to that. But it can be pretty intoxicating for someone who really doesn't know what they're doing to be trading, moving in and out, because you can see huge swings up and you can say, man, look at this. This is great. I'm going to hang on to it forever. And then the very next day, it can be crushed.
If you enter into the world of trading, so if you get a Robinhood account or even a TD Ameritrade and you start day trading, you are entering into a competition. Because every time a stock price moves, it's constantly, you can see the trade volume, you are in competition. So you are making a bet that you know more than what everybody else knows in the trading world. And so day trading is you are thinking that you are buying and selling, because no matter what, there's always a buy, there's always a sell every time. If you are making a purchase of a stock, that means somebody else, an actual person or institution, is selling that to you. And there's just a middleman, the exchange floor, that's making that transaction happen. And so you are entering into this short game competition with MBA, Harvard grads that work on Wall Street, that are listening to what's going on with all these businesses at all times. It's an extremely competitive world with some extremely smart people. There's a lot of articles on the risks of that. There is 80% of the time investing, long-term dollar cost averaging investing beats out the returns of day trading and swing trading 80% of the time. We have a joke in the office that we say trading's like a bar of soap. The more you touch it and trade it and try to win, the more it's going to dwindle down.
Yep.
Because you've got to really do your research, know your stuff, and you are making you're making those bets on a short-term basis. But investing, so time determines the risk. So the longer you have in that time, that's where you look at the airline companies. I don't know if airline companies are going to be up this week, next week, today. They've been beat up pretty bad. Boeing company, that's been beat up pretty bad. Bringing in some of the diversification, looking at more of the ETFs, the exchange traded funds, Jets, that has a lot of the different airlines and Boeing and that industry going into it. I would assume in the next 10 years, that's going to be higher than it is right now. We'll get over the hump of COVID and what we're going through right now, and we'll get kind of back on track. I don't know if we'll be back up there. I don't know if business travel will be as high as it once was, but it's pretty easy assumption to think that it will be higher than it is right now. I don't know when, but that time will minimize my risk of doing it. So that investing will minimize your risk. It's not as fun. It's not as attractive, but it's tried and true. That's Warren Buffett. The dollar cost averaging is that.
I was just going to say.
Yeah, the guy's brilliant. Warren Buffett, there's a reason why a lot of people look up to him for financial advice. Dollar cost averaging, you're putting in the same amount and you're doing that on a regular basis, whether it's monthly, weekly, daily, it's that same amount going into the market. And then what happens is you're going to hit some peaks, but you're also going to hit a lot of the valleys. You want to buy low, sell high, right? So that dollar cost averaging, that's a true way of making sure you're going to hit some of those bottoms. It's you're hitting a larger target there. You're not trying to time. If for those that are pulling out of the market right now based on fear, I mean, they've got to time it twice. They're really hoping the market's going to go down. And then what? You're hoping that your timing is right now. And then you're hoping you're going to be able to time it again. And there's a lot of risk with that, where if you just have some cash on hand already, and if you're dollar cost averaging, and then when that market, like back in March, if the market does take a big deep dive again, hey, it's on sale. That's when you shift some cash, maybe adjust some of your expenses to put more priority on putting more into the market. Oh man, statistically, mathematically, you're going to end up way ahead than if you're trying to buy and sell constantly.
Yep. So for those of you guys watching today or watching at a future date, just think about this, right? Do you have time to study all of these companies? Do you have time to dig deep into the nuances of what's making them tick to where you could trade effectively? I don't, and I'm in the industry. Kent, do you?
No, we have a portfolio manager.
That's why we're doing a lunch money series, right? A short bit of time of education.
I stay up to date. We help on the investing. We have a portfolio manager that stays more up to date than we do. And I don't mess with day trading.
But so the point is, you're best served investing for the long term in the markets versus trading. That's really it in a nutshell. Now let's kind of wrap this up with our remaining time today, just talking about where can you get good advice. You want to begin investing for retirement or investing for something else. Again, we're talking 10 plus years down the road. Where do you get good advice on how to start that, Kent?
The reason why both of us work with this company here is because it's a fiduciary company, and you're going to hear that word a lot right now. But you really want to work with somebody that acts true to that word. So that means that an advisor, somebody's giving you advice on whatever is in your best interest, not what products do they have available to sell you, not what do they know or is in their wheelhouse. That's that's where, like, the guy I get my property and casualty insurance from, brilliant, great, he's amazing. I'd put him in the top of that industry. He knows his stuff. He'll advocate for me if I need him to. He really knows that whole world. And he's told me, he's like, yeah, I can get my series license and sell these products, and some people in my company do, but he's like, that's not, you can't be an expert at everything. And that's not what he's doing. And I would agree with that. Like, I would not get financial advice from somebody you get your insurance from. That's just kind of a start. There may be anomalies. I mean, that's kind of a bell curve, right? There's going to be outliers there, but go with somebody that operates on a fiduciary responsibility. There's a lot of good information. Be careful on the internet on where you get information from, on the credible sources. But these big companies have a lot of good, TD Ameritrade, E-Trade, Charles Schwab, I mean, Robinhood, even a lot of these companies have really good training. Robinhood's getting better. They've had some upsets this year, and they've created a lot more information on investing even. We're always happy to help too, and get you started. And we teach a lot of people on how to invest on your own too.
Well, and so that comment right there that you make, Kent, teaching, I would say, where do I go to get good advice? I would go to somebody who's wanting to teach you, who's wanting to help you understand. If you reach out to a financial advisor or anyone who says, well, just give me your money and trust me, run away, because you want to understand how your money is working for you. You want to know, you don't have to know the minutia of it, but at a 30,000 foot view, you need to understand how your money is working for you. And so you want to find someone that you trust that has the ability to teach you and connect with you. And like Kent was saying, give you the ability to do it yourself if you want to. And there's, like, we get emails all the time, very simple questions. What is a stock? What is a bond? These questions we're going to be answering in our next webinar, but with a little bit of basic understanding from someone who has an educational approach, you can be well on your way to becoming a wise investor. And it may not be flashy and it may not be trendy, but here's the thing, it will work for you in the long run.
And go with somebody that has some experience. I mean, trust and experience are so important. I mean, we all have to start somewhere, and I'm really glad people trusted me when I first started out. But I'd also say, it was a bumpy road at first, and it's hard because you might have a really good friend that you really trust, and they've got into the industry, but you don't know, who are they learning from? What's the motivation? What company are they with? Is their company more insurance based? Are they going to try to fit you into this insurance box, but really what you want is investing? That's something I'd be careful on because your money's important, and you can always get a second opinion. And I'd even say I'd offer that up. If you have that friend that's starting out, you want to support them, and you want to double check the plan, I mean, reach out to us, because I mean, good advisors are good for everybody. And there's a lot of good advisors in this town too.
Yeah, I'll jump in here that we at CapEd have a established relationship with Tree City Advisors. We went through a process that was about 2 years long, finding that company with whom, or a financial advisor with whom we would want to connect to be able to refer our members to for financial, specifically investing advice. And so we can layer our testimonial to the value and importance of that education piece and that advice. We spoke about a fiduciary. You want to quickly explain what a fiduciary is and why that's important when somebody's looking for that financial advice?
Yeah. So again, the term fiduciary means that I'm acting in your best interest. And that's all that I can do, is give you advice that's in your best interest. The other term within the industry would be called suitability. Suitability means that, and I'm just going to look at you and kind of point you out, Todd. Say I'm working with you. Suitability says, well, Todd tells me his goals, and there are, say, 5 different products that each have the ability to achieve Todd's goal.
Mhm.
Suitability says, as long as all 5 products will achieve Todd's goal, I can recommend any of them. Here's what happens though. Suitability, what typically happens in the industry is that the advisor will look at these 5 products that suit Todd's goals and say, well, this one's going to pay me this amount. This one's going to pay me a little bit more. This one will pay me a little bit more. This one will pay me a little bit more. And this one will pay me a little bit more. The suitability rule allows me to say, well, all these work, but I think, Todd, this one is for you. And you wouldn't know that I'm getting a higher commission on that one. You are just trusting that I'm giving you good advice. Whereas we go back to a fiduciary capacity, if I still know that there are 5 things that achieve your goal, I'm obligated to take all of the ones off the table that are not in your financial best interests and only present the one that's most cost effective at reaching your goals.
And he says,
Again, let me share a quick story about that. Jeremiah is in your office. We've seen him on a couple of the other lunch money webinars. When I met with him, he said, let's not do this. Let's not do this. This is the most affordable, not the cheapest, the most affordable piece for me and my household as it relates to some of our private investing. And I said, so are you getting a commission on this? He says, nope. If we would have done this, this, or this, I would have gotten a commission. I said, but you didn't even talk about those. He says, nope, that's not what we're about. We're about giving the right advice and directing individuals into the right path that's best for them. And again, that's why we like our approach with and referrals to you folks. To those who have joined us on the webinar today, you guys want to share your website quickly, and then let's end by talking about where they can get free advice Monday through Friday at 6 o'clock every evening.
Sure. I'm gonna type in our web address here.
Okay. So that'll be down in the chat for those who have joined us as attendees. If you open up your chat window, you'll then be able to see the information that Nick's going to share.
you can use the Ask the Experts feature on that website. So it's the realmoneypros.com, and use the Ask the Experts feature, and that'll send us an email and we can respond. So if you have a question, send us an email. If you'd like further, we can help you out.
You see that question?
You put in there realmoneypros.com. You want to quickly talk about the radio program that's on KBOI 670 AM?
Yeah. So we've got a 5-night-a-week show, Monday through Friday, and then we have a Sunday afternoon evening show from 3 to 5. So Monday through Friday, it's from 6 to 7 p.m. On Sunday, it's from 3 to 5 on 670 KBOI. And then on the Sunday show, we do that live streaming as well. So you can see it on our Facebook page. That one's been really fun.
Yep.
Really good to do.
And in full disclosure, we'll share that we as CapEd Credit Union, we are a sponsor of that show. We have been for about 5, almost 6 years. And I appreciate the openness and taking questions from callers and then being able to provide that advice. We do have a question here, and I think it's a good one to cover. It's what is the typical hourly rate range for a fiduciary advice, or is it by action needed? You want to take a stab at that one, Kent or Nick?
Yeah, it's much more by action needed.
Mhm.
And what are your needs? What kind of relationship do you want? It literally ranges from, $300 to $25,000. It's if it's not that complicated and it's not going to take us hours of research and what we're doing, or utilizing all the other teammates that we have to, we're going to be on the lower end. But if we're helping with complex mergers and acquisitions, and these solo K cash balance plans, and or saving you $400,000 a year in taxes by shifting these things around and investing properly, then that's that's going to be more on the complex side.
Yeah.
It's a
One of
range.
the things that we should- and correct me if I'm wrong on this, but Tree City Advisors will have that initial consultation with an individual and go through a discovery, if you will, of help us understand your personal needs and then take it from there. One of the things that we see through the Real Money Pros is access to tax accountants, real estate, estate planning attorneys. I know that we had Jen Wolf on in one of these presentations earlier. We also had Steve Marsh from Medical Plans of Idaho. And that's what we like as well, is that you take a holistic approach to it. Not just one piece and that's, yeah, you got to go find this on your own, but rather say, hey, let us help you find that team of individuals. You want to speak a little bit about that in your approach?
Yeah, and too, just for Gypsy's benefit and all other viewers' benefit, at Tree City Advisors and at many firms throughout the Valley, the first appointment, there's usually not a charge. At Tree City, we don't charge to sit down and get to know you, and you get to know us, and us discover if there's even a way that we can add value to your situation. If we can, we'll tell you. If we can't, we'll tell you.
Vast majority of people gain value in that first meeting.
Mm-hmm.
Right. Being able to understand that. I know that we're coming up on our time here, but we appreciate everybody who has joined us today and the great questions that we've been able to address and discuss. Nick and Kent, thank you for being with us. We'll see you again on Thursday, continuing our conversation within the Halloween week of taking the fear out of investing. We appreciate all that you do for our CAPED members and those of our mutual clients. We appreciate those who have joined us today, and we look forward to seeing everybody again on Thursday. Have a great afternoon, everybody.
See you guys.
Thanks, Todd.
Bye.